H&R Block, you're killing me. Why are you such a loser? Hey guys, welcome back. Chris Gunnels with Real Financial Success. And if you've watched my last videos, you know I put on a naked put in H&R Block. And unfortunately, it has gone against me. And it just hasn't turned around. It's no big deal. Just watch to the end of this video to see how I'm managing the loser and hopefully turning it into a profit. Okay, so H&R Block opened today at $23 and it didn't want to go any higher. It just wanted to keep going lower. I thought to myself, let's give it an hour or so, but this was actually a bad decision because I gave up some premium in waiting on executing a roll. I checked H&R Block about an hour later after the open and it dropped to $22.70 or so, somewhere around there, which of course is past my break-even point. At this point, I really didn't have any choice but to roll my put option out to August. Now, if you remember in my last video, I mentioned rolling out in time to August for 22 cents per share. Well, waiting sometimes hurts you because now I can only get about 18 cents per share. And in fact, let me show you the activity today of where I got filled. You can see right here I got filled for 18 cents as I bought back the July 20th put and then I sold the August 17th put for a net credit of 18 cents. Of course, the good thing about that is it did add to my break-even point, but it wasn't really that much, only 18 cents. So because of that, I took a look at the chart and you can see here for today, it's a doji, just a little technical analysis for you. It's called a doji when it looks like a cross like that. And basically it just means that the market doesn't really know which way it wants to go. But in looking at the chart, you can see that it broke the lows and it looks like it may go down further. As you can see, the lows are right here. I guess it broke the lows before, but it went even lower all the way down here. Since I saw that on the chart, I decided to sell a call option to add some cushion to my break even. Let me show you. Right here is the call option. It is the same strike, the 24 strike call option for August. And if we go to the little risk profile and I click it on, you can see that that's what the chart looks like now. So I do have risk going towards the upside now instead of just the downside. It didn't really add any additional buying power to the trade, so I'm not too concerned about that. But really at this point, I'm looking to just make a small profit or a scratch on the trade because it just keeps going against me. But let me show you the difference here by adding the call option. I don't think I explained it well enough for you. You can see, let's see, the call options right here, and in the activity, I sold the call option for an additional 55-cent credit. So remember in the beginning, I sold the initial $24 put for $1.07. I just today rolled it for 18 cents more, so $1.07. I guess we can break out the calculator. 107 plus 18 cents. So that was my total credit on the put side. But then I bought the call option, or excuse me, I sold the call option for 55 cents. So we have to add that 0.55. So a total of $1.80 credit for this trade, which basically takes my 24 strike price. The break even goes all the way from $1.80, or excuse me, from 24 minus $1.80. So what is that? So my break even is $22.20. Now, of course, I can continue to roll this out in time. Let me show you what I mean by that. We'll just do the put option side. So if we go to the trade tab, the table tab, the way that we would roll this out in time for additional credit to improve our break even and our overall cost basis, we would sell the August 24, we would buy it back because we already sold it. And then we would go out to October and sell the 24 strike price. That would give us a 78 cents credit on top of what we've already received. The only problem with this is I don't really want to go out that far. That's a huge roll. That's 116 days to expiration. But, you know, if it's either continue to roll and make these types of adjustments, or you can cut your losses and just take the losses on the trade. Another option, pun intended, is if H&R Block continues to go against me, I'll end up rolling my call past my put, going inverted. Of course, I will actually create another video for you talking about inversion, because that's a whole new subject. Suffice it to say, it's just another way of collecting more premium or credits while still giving yourself a chance to win on the trade. You do have to watch how far you go inverted, because you could be locking in losses if you go too far. This is a good time to subscribe if you haven't already, because you don't want to miss my inversion video. Okay guys, thanks for watching, and remember to comment, like the video, and subscribe. Ring that notification bell so that you're notified, of course, when I create a new video. We'll see you next time.